Hey, TikTok, Joe Malone here, coming to you live on Dallas Trading Floor. It is Friday, July 10th. And the market's kind of mixed, but some of the stocks are doing great. Tesla's doing great, so is Netflix. So there is definitely some good action going on in the market. And just wanted to get to it with the slides. And by the way, if you'd like to sign up for our trade alerts, we have a free trade alerts. And basically, you can do this by going to Dallas Trading Floor and just filling out the subscription form. It's totally free. I basically show you trades that might be of interest to you. I have a trade today on an interesting stock. Excuse me. Wow. I have a trade today on an interesting stock, Limelight Networks, that you might be interested in. It's top rated. It's under $10, and its profits jumped 50% last quarter. And it's getting ready to report. Not necessarily the best time to buy a stock before it reports, but this one might be of interest to you. And I'm going to go through it here in just a second. So here we go. Back to the Dallas Trading Floor. Here we go. The market direction is up. It is up, and the Nasdaq is leading the way as usual. It's over 10,000, 10,561. It's basically at almost an all-time high, which is kind of amazing considering the environment that we're in. You know, I'm not so sure about some of the companies like the airlines. As a matter of fact, I don't know if you heard this, but American Airlines has basically said, yeah, they want to take delivery on the 737 MAX, but they don't have the financing. Not a good sign. And also, you have, stocks like Boeing, which, is a great company, and the largest exporter and the biggest company in the Dow Jones. Well, it has a lot of customers like this. So, go figure. But yet we're making record highs. So it's a tough one to figure out. Here's the thing. We've got the SPDR. Now, the SPDR, just for those who don't know this is the largest ETF in the world. It's worth about, it's over worth $230 billion. Many people have their retirement in this in this ETF. It's the biggest ETF out there, and it typically follows the S&P 500 almost exactly. So it's up today $2.31 or about 0.74% at 316.69. Now, here's the thing, and here's the interesting thing about this. We haven't totally regained where we were prior to the meltdown in the market, but we're getting there. So it's still not a good time to be short in the market. Of course, here at the bottom, this is the March 23rd. This is the March 23rd low, and basically at that time, the SPDR was 218. So it's come up an amazing almost 100 points, about 98 points. $98 a share all the way up. So it's almost regained where it was. Now, prior to the meltdown, it was about in the 340 range. So we're not quite there yet. The question is, when we reopen, what's going to happen with that? So we just don't know. The next one up is, there we go, is the QQQ. Now, the Qs are very interesting because they cover the NASDAQ 100. This has been where the power has been in the market. We've seen a ton of movement to the upside in the Qs. And the QQQ basically covers the NASDAQ 100. And of course, many of the very best stocks for right now are in there. All the good ones like Amazon, Microsoft, Netflix, all the FANGs are in there, and it's been powering up. Now, when this slide was taken, it was just slightly up, only 0.15, but it's still leading the pack. So it's kind of interesting to see that, how it's moved in that upward direction. It just continues to move in the upward direction. So there's still money coming into the market. So that's a very important thing that you have to realize. You don't want to fight the tape ever, and you don't want to fight the tape. So as long as the Qs are moving up, you want to be long in the market. Now, here's the next one, is the Dow Jones. This is the one that today had most of the upward momentum, and it needed it because you can see it's hugging the 40-day moving average. That's this red line here, and it's kind of bounced off of that. It went up a little bit, and then it looks like it's going to bounce back up, but it's sort of hugging the 40-day moving average. Now, why would that be? Well, part of the reason it is because much of the stock market is traded by programmatic traders, computer programs that basically look at the index and they say, oh, well, if it's moving down towards the index, sell. If it's moving up, buy. And that's essentially what's happening here. But it's a big day for the Dow, up $3 or 1.17. This has been a lagging. This has been lagging. It's down a little bit in volume, down about 40% in volume. It's only 60% of the volume that it normally does, but still very significant in that this has been a lagging index, and now it seems to be, at least for today, the one that everybody is, is looking at. Now, I want to show you a very interesting talk. I think that we're seeing a change in the market, and I want to be clear about that because I think it's very important to kind of show you this. This is a chart of Netflix. Now, Netflix is up tremendously today, and I own this stock, and it has been on my watch list for a long time. But basically what's happening is with the COVID-19 problem, all of the film studios now are having to switch their premiering of entertainment to Netflix. It's really a sea change because the theater chains like the Cinemarks and the AMCs of the world, they're in a bad way because they can't open. But Netflix is taking up the slack. So I do predict in the future we're going to see a shift away from physical theaters like we're used to Netflix. So Netflix, I think, has a lot of leg here. Today it's up 7.4% or about $27 when this slide was taken. So tremendously, it's a big change, and I think it's going to be a change in the way that we see entertainment. I think Hollywood is going to increasingly have to release their films and through Netflix, and that's a tremendous thing because Netflix has such a moat when it comes to online entertainment. So I do think that it's possibly even going higher if that's possible. But I do think it is even going higher. Now, as I promised everybody, I'm going to show you an interesting stock, a stock that, it's a fun thing. This doesn't have a perfect chart, but it has a very good chart, and the price is right. And I think that even though it's down a little bit today, I think you might want to possibly put it on a watch list because sometimes when you buy these less expensive stocks, if they're bought right and if they're in the right areas, they can be very profitable. And here's one that I think you might want to take a look at. It's called Limelight Networks. Now, it's been around since 2007, so it's kind of a seasoned stock. And as you can see, it's sort of, it's come down, but now it's starting to move up. And today, it's really moved up. Now, one of the things I want to show you about this that I think is very, very important, the earnings per share from this quarter to last quarter is up 75%. Now, they do report very soon, so who knows what they're going to report. It's always dangerous to buy a stock like this prior to its earnings. So probably the best thing to do would be to put this on your watch list and possibly look to buy this thing after the 20th, which is in 10 days, because it might continue up. Now, it's gapped up here, and then it's readjusting. I don't know probably what I'll do on this one. I'm probably going to wait until after earnings to see if it has legs, and if it does, I'd probably buy it. But for right now, I'm going to watch this one because it has a 96 composite rating. That's almost perfect. 99 is perfect. It also has extremely strong relative strength, and this is another thing I look at very, very carefully. The relative strength rating is 97. 97, that's really good. 99 is the best that you can get. So this is the top rated under $10 internet stock. And by the way, if you were in our trade alerts, we sent out an alert on this just before I went on the air. I was a little bit late in coming on the air because I was sending out this alert. But if you'd like to receive these alerts, it's totally free. Just click just click on the banner and you can sign up. Let me just put up on the screen our trade alert URL so you can see that. If you want to sign up for these trade alerts like this, you definitely can. I'll just note down this number and just type it into your browser, or if you're on TikTok, it's really easy to do. Just go to my profile, hit on the link, and then it'll take you right to the alerts page, and it'll show this. By the way, if you're looking at this on TikTok, you can't see this, unfortunately, because I don't have the capability of broadcasting these slides on TikTok, but I am broadcasting them on YouTube. So if you want to see this, youtube.com/Dallas Trading Floor. And by the way, for everybody, TikTok is under some, there's a cloud on TikTok. It may go away. So if it does, I will always be on YouTube. And all the shows that I have are all on YouTube. So it's youtube.com/Dallas Trading Floor. And basically just type in the number of the show. This is number 85, or possibly the date, and then it'll bring that up. And I also have other stuff on chart reading and various other things there. And by the way, if you do go there, please like me, please subscribe, and all those good things. So I just wanted to say that. So again, free trade alerts, and I will just leave this up on the screen so you can link to it pretty easily. All right, so I just want to show you another. So my portfolio as of today, I want to show you my portfolio as of today, and this is basically it. I think you can see everything. Yeah, I have basically currently in my portfolio, I have Netflix, Tesla, Viva Systems, Vertex, Teladoc, Blink Charging, which is a low price stock, and then KL, which is a gold miner, Canadian gold miner. Now, today I will be selling. I will be selling Vertex Pharmaceuticals. It will go away, and then in 7 days, Viva Systems will go away too. So those are coming out of my portfolio. I've reached the profitability that I wanted on those. And by the way, I shared with you these trades earlier in some of my earlier shows to show you kind of how I traded those with call options. So something that you might want to, if you're interested, it's available. It's all archived it's all archived on YouTube at youtube.com/Dallas Trading Floor. So pull this up. All right, great, and I'll just show you where we're on currently, just because there may be a situation where TikTok goes away. I certainly hope it doesn't, but it might. So I just want to be ready for that with with something with an alternative, and the alternative that I have right now, of course, is YouTube at youtube.com/Dallas Trading Floor. So let's see. Okay. Well, hey, isn't Tesla? Yeah, Tesla is sort of rocketing up there. It's amazing. I think some of the analysts have indicated that they think Tesla might make 2,000 before the end of the year. I don't know. The way it's gone, it may actually do before that. So you never know. Okay. Let's see. I got PDT on Robinhood until. Oh, that's terrible. Until October 9th. You know what? Unfortunately, so many people that have been tuning in, and thank you so much for tuning in, have had problems with Robinhood. I mean, it's a great app. It's easy to use. But you know what? I use TD Ameritrade, and I'm going to put an offer, hopefully, on here pretty quick if you sign up for the VIP trade alerts. Because there's some things, it's not quite as, I agree with you, it's not as easy to use as Robinhood, but TD Ameritrade has much, much more capital, and so you don't have some of these executional problems like setting stop loss and stuff like that, which is so important if you're trading that you do on Robinhood. Nothing against Robinhood. I think they're great. They've got some great ideas with fractional shares and all that, but if you're trading, sometimes it doesn't work that well. I do think it's a good idea. It sure will be big, but TD Ameritrade is sort of my go-to only because it's very easy to use relatively, and they have Thinkorswim, which I think is an excellent platform. They bought it from another company. They didn't invent it themselves. They bought it from an options trader in Chicago. If you're interested, there's another site called Tasty Trade. Here I am talking about other people, but Tasty Trade is a really good trade. The trader there is super. I mean, he started in the pits in Chicago, so highly recommended. I'd love to get him on as a guest on this show, but he basically put together Thinkorswim, which I think is just a terrific platform. Unfortunately, it's only available if you use TD Ameritrade, but it is free, so there you go. All right. Oh, hey, Wendy. Tesla update. Well, I will get a Tesla update in just a bit. Thank you, Wendy. Thank you so much. Enjoyed talking to you today. All right. So RNG. So let me take a look at RNG real quick here, and get to your questions. All right. So let me pull this up on the screen. RNG. All right. And there we go. Ring Central. Oh, a great stock. A great stock. It's down a little bit today, but this is a winner chicken dinner. I really like this stock. I'm going to show you the weekly chart. Always when you're doing this, it's best when you're doing chart. You're looking at charts. You want to first kind of go from general to specific. That's very important when you're looking at charts. So always take a look at the weekly chart first, and that's going to give you the cues on directionality and that kind of thing. And then kind of zoom in to the weekly charts. I know that usually it starts from the dailies, and you're looking at the dailies. It's harder to see long-term trends, obviously, with the daily charts than it is a weekly chart. So weekly charts really, my chart reading is really based on weekly charts, and I think that's something that you want to look at. Okay, it's basically what happening is here. Ring Central is coming back to the 40-day moving average, which is absolutely just like it should be. It's making very good progress. Good stock. I wouldn't, try not to buy a stock like this when it's on a downtick, as it is right now. But the relative strength is extremely strong. It's a 95 relative strength. That means it's outproducing all but 5% of the market. So that's terrific. And as you can see, look at how it just hugs this 40-day moving average. There's a lot of programmatic trading going on. You can tell this just by this chart. There's a lot of computer programs that are buying it. They're buying it as it bounces off this line. So if it comes down a little bit, they're buying it. As you can see, these blue bars are up bars. It's a little bit high. Oh, look at that. It just went after hours. Look at that. Wowie, kazowie. Wow. Okay. Well, there you go. Wow. Is that right? It says it's 549 after hours. Wow. Wow. I don't know if that's true or not. No. Okay. It's adjusting. I was gonna say wow. Who knows? I don't know exactly where that is. So this may not be the right number. I will probably. Well, yeah. Okay. There you go. That's more like it. I was going to go. Wow. When it goes to after hours, sometimes my charts go crazy because the feeds aren't quite synced up. It's up 7.31 after hours, 2.5%. This is amazing. This stock is on fire. So if you're not in it, let me just take a quick look to see when they report. This might be one that we might want to do. Okay, it reports on the 29th, as you can see. It reports on the 29th there. This might be, I'm going to have to look at this because it's not in the correct chart pattern to do an options play on it because it isn't basing, it doesn't look like. But I want to look at this one potentially for an options trade for next week. So thanks for bringing that up, and I will try to see if I can analyze that. I want to see if I can analyze that one. Will Tesla crash if they lose money this quarter? I seriously doubt it. I seriously doubt it. And the reason I doubt it is because Tesla is part of a much bigger story. Normally I'm not a story stock guy, but the electrification of automobiles is, just a absolute trend that is happening in the market right now. And it's unstoppable. And the reason it's so significant is because automobile manufacturing makes up such a large portion of the economy. As a matter of fact, Germany, I think it's 40% of their export economy is in cars. And so it's just the kind of thing where, there's a change happening. This hasn't happened in 100 years. Folks, this is absolutely a game changer. It hasn't happened it hasn't happened in 100 years, and it's happening now. And Tesla's out in front of it. So, yes, that's why I like Tesla. I mean, do I like the price? I wish it were cheaper. I really do. I mean, I started buying it basically at the first base, which was 361, and then you know, I bought and sold it several times, and then it came up to 869. Again, I sold there, and I bought it. The last time I bought it was just right under the resistance at 1,000. Now, where is the resistance on this? Heck, I don't know, but I do think we're going to see some resistance at 2,000. Now, when will it get there? I don't know, but the analysts, some of the very reputable analysts, are saying possibly before the end of the year. I think it's going to be sooner, to be honest, because I think when the economy reopens, the demand for Tesla is going to be huge. Battery Day is coming up. That's the thing that Elon Musk has with you know, with showing off the new batteries. You know, 3 years ago, batteries really couldn't compete with range with the gasoline and the diesel-based vehicles. Now, it's changed. Batteries actually may theoretically become more capable than the most capable than the most capable cars that we have in the gasoline and diesel space. So it's just incredible what's going to happen. So I don't think it's going to collapse, but you know, I would be careful when you're buying it. I don't want to, you know, try to only buy it on an uptick. Now, unfortunately, today it's up $137, which is a heck of a lot. Now, after hours, it's even up. So it's up. Wow, it's up even after hours. So very strong volume. The volume is up a little bit. It's trading about 57% larger than it normally does. So it's up quite a bit. This is one of my core holdings, by the way, just for full disclosure. Anyway, so let's see about the TikTok, what people are saying on TikTok. So here we go. Hey, thanks, man. What do you think about AIG, American General Group? Well, I talked a little bit about AIG yesterday. I like AIG, the company. By the way, this is the company that Ace Greenberg used to run, and when he ran it, I think it was a better company. I don't think it is. This is one of the few companies that was ever bailed out by the Treasury. This was back with when Lehman Brothers collapsed. I don't remember if you remember that, in about the 2007 timeframe. They also had to go in and bail out AIG, American International Group. I would not buy this stock, and I'll tell you, and I'll show you why. I'm going to go over and show you the chart right now. I wouldn't buy this chart because it's a downward trending chart. I don't particularly like that. Now I'm going to go to the weekly chart, so I'm going to eat my own dog food here and show you this. Yeah, this is why you should always look at a weekly chart, because it's going to show you the real trend, and that's the important thing. We want to be trend traders. So here we go. You see, if I looked at the daily chart, I'd say, oh, well, it's coming back up. No, if you look at the trend, it is down. It is clearly from upper left to lower right. This is a very bad trend. I wouldn't buy on this trend. Remember, we want to buy the best stocks high going higher, and this is just not that case. Now, would I necessarily do I have all bad things to say about AIG? No, it's up today $2. So it is reversing course, but I don't want to be in the stock until it hits $55 or $60 a share. Now, you say, well, why would you buy it at 55 or 60 if you could buy it, you know, at 30? Well, the reason is because I want to make sure that capital is flowing into the market. Remember, I'm not by myself buying a stock. I'm not going to determine its price. I can only follow along the whales. The whales are the ones, the big funds are moving into a stock. That's who determines the price of the stock, not me in buying my 1 or 2 or 10 or 100 little shares. I can't move a stock up or down, but I can follow along with the people that can move the stock. So I would not be a buyer of AIG. I'm just sorry to say that, because it was a once great company, and it may be again, but right now, not so much. Thank you so much, Ian, for looking at us on YouTube. I really appreciate it. And by the way, I'm going to have the slide set available after the show. I'm going to when the show is downloaded to YouTube, after it's there's going to be a little thing in the comments where you can just click on to get the slide set. It's a PowerPoint slide set that I put together every day. to kind of give you an idea of, the trade of the day and kind of the general direction. And if you look at these over a period of time, you can really get a good idea of the market. Now, this next stock is FTEK. So let me go ahead and do that really quick. FTEK. Let me see if I can bring that stock up here. And that's Fuel Technology. Oh, wowee. Okay, so this is essentially a penny stock. I don't have a problem with penny stocks, but I do have a problem with penny stocks when they have when they have a composite rating like this. So let me go ahead and put up the this stock. It's 96 cents. It's down. I wouldn't buy it just because even though it does have somewhat of an uptrend here, it's not the kind of stock that I think you should be in. It also has a decreasing volume. I couldn't recommend this one. I just don't think just don't think that one would probably work that well. So let me show you a stock that is a very low price stock that I do think has a good chart right here, so that I'm not just saying, well, don't do that, and then I'm not giving you any kind of alternative. Here's a stock that I'm in that I like. It's called Blink, BLNK, and what they do is they make charging stations. Now, of course, I'm not guaranteeing the stock, but I am in the stock for, I am in this in the stock. It's down a little bit today, but I do think it has good legs on it. It's got a little bit better chart, so let me show you that really quickly right now, and that's Blink Charging. This one's a $7 stock. It's down, but it's up after hours 1 cent, so not a whole lot. But remember, it's got a composite rating of 82. I typically don't like to buy stocks unless they have at least an 80 rating, and that gives you a little bit of protection there on that. So instead of buying a 98-cent stock, and if you want to be in the cheap stocks, why not buy one that has a very good chart? That's going to give you a better chance of being successful. I also want to show you one, Limelight Networks, that I have up today. And by the way, this is on, this is a stock that I don't own this currently, but I do. It is definitely on my watch list, and it was a stock of the day today. I put it out there. So let me show you this one. It's called Limelight Networks. It's under $10. It's currently trading at about, when the slide was taken, about $7.67. It was down a little bit today, but it's got a 96 rating, and that's one of the things that I want to really look at. Also got a really nice trending chart like this. It also has, its EPS has improved by 75% in the last quarter, and it's coming up on earnings. I wouldn't buy this until after earnings. The earnings are July 20th on this one, but I do think that this one might be a way if you want to go with a lesser price stock. I understand the allure of lesser price stocks. Personally, I typically make more money on higher price stocks, but Tesla costs $1,500 a share, so that's a lot, and you can't buy that much of it right now, but it's still a great stock. Anyways, any thoughts on MU? Oh, I like Micron. I've been in Micron many times. Here's the thing about Micron. Basically, Micron and Samsung and Hynix, I don't know if you've heard of that company. It's a South Korean company, but they basically are the biggest pure play. They're the biggest memory manufacturers in the world, and really, Micron is the world leader in the very fast memory that they're installing in many of the colo facilities. The cloud-based operators are buying their memory tremendously, and they're up tremendously. We're in right now, and I think that's important to note. We are in a super cycle for the semiconductor industry. They have gone to the next generation, and we're going to be seeing, at least in the next 6 months, a tremendous investment in the sector. So you're going to see investment in companies like Applied Materials, KLA, Tencor, and also the chip makers such as NVIDIA. But Micron primarily is in the fast memory space and memory in general. They are a world leader, so I think it's definitely worth looking at. This at one time, and I think last year, I don't know what the PE ratio on it, this was the highest PE ratio in the S&P 500. So let me just kind of look here. Yeah, okay, this is part of the cycle. See the EPS last quarter, it was down. This is because the semiconductor cycle is very intense in that it takes about 18 months from peak to trough. Right now, it's coming out of this, and you're going to see these earnings per share improve tremendously. So right now, this is probably a good time in the cycle to be looking at Micron. And I have traded this before very successfully. It is a good company, and it's got very nice margins. And the thing about this is that it is a tremendously important stock. Now, there are some concern areas, and I just want to show you this. The industry group rank is very low at 154. It's in the data storage group, which, because it's basically a pure play memory, which is not one of the top. It's not like the internet or enterprise. So it's there's 197 different sectors. It's not in the top. Typically, I like to pick stocks that are in the top third of all the sectors. This is not the case with Micron, but it is an overall very strong stock. I would not buy it unless it was on an uptick, though you've got to be careful because these can be very, very cyclical. And as you can see, it's bounced off the 40-day moving average. I'm going to go to the weekly chart basically to kind of illustrate this here. And this is important when you're looking at the stock. There we go. Okay, right now it's not. It's becoming a buy, but it's not a buy yet. And here's why. Take a look at this 40-day moving average here. That's the red line that you're seeing. You see how it crossed below the 200-day? That's the black line here. When that happens, that's a very bearish sign. That's what they call the death cross. Now it's come down and it's come up and it's crossing. It looks like it's going to cross above the 200-day moving average. You never want to buy a stock unless it's crossed, the 40-day is crossed above the 200-day. And the reason why is because that means that this is being accumulated and not sold off. If it's the other way, it means that the big institutions are selling it off. So that's one of the things you want to look at here. But Micron is a watch list stock. I wouldn't buy it until it is confirmed a little bit better than it is. But it's a quality company. So definitely thank you so much for the question there on that. Okay, let's see. CIEN. Let me just look at CIEN really quick here to get an idea. CIEN, and let's see if I can get. Oh, there we go. Okay. Very, very good, strong, and it's up after hours. Ethernet switching, good area to be in the market. Let me show you this chart here. Basically, what we have is a very strong stock in a very strong sector. 92 is an excellent composite rating. It's number 2 in the group. The number 1 is LITE. So let's take a look. I don't know offhand what LITE is. I don't remember that name, but let's see. Yeah, okay. Lumentium Holdings. Okay, not that familiar with this stock either. So you think I would know that, but I don't. Provides optical communication project. Okay, that's good here. So, but still, this is a very strong. This is a very, very strong stock. Yeah, I think this is. I think this is definitely something that. Oh, click back here so that I don't bore you with everything. But let's go back to CIEN. See if I can give you a good read on that. And there we go. And this is the weekly chart for this. Yeah, this is a good chart. This is very viable. 87 relative strength, that's good. The 40-day has moved above the 200-day, that's excellent. Yeah, this is definitely a viable chart. Definitely viable. You can either watch list this one, or or potentially this is potentially a viable chart. Very nice movement here on the volume. It's up above the 40-day moving average. That shows a lot of strength. That shows this is being accumulated, by the way, by the large funds. So let's see if I can give you more info on this. All right. I'm just going to look at the accumulation on this. Okay. I would say that's a very good one. So it is being accumulated. That's definitely true. Okay, thoughts on ENZ, symbol ENZ. So, all right, another very inexpensive stock. Now I'm not necessarily against stocks that are below $10. I have definitely made money on stocks below $10. But here's the thing: you have to be very careful when you buy stocks below $10 because they tend you only want to buy the absolute highest of highest qualities. This is not the case with this Biochem. Okay, I'm not saying it's necessarily a bad stock, but it's just not where I want to be at 39. Here's the way to play the this is in the medical, which I like, research. I like this, but here's a better way to play that market. It's with the biotech stocks, the fund, the IBB. And let me show you the IBB really quickly here. This is the biotech area is a tremendous area, but the problem with biotech companies is that they tend to be very choppy. They either don't make money, or then all of a sudden they make a lot of money. So how do you deal with that? Well, one of the ways you deal with that is with ETF, which is going to buy a basket of these stocks that's going to give you a better chance of success. And one of the ways you can do this is with the IBB, and I'll show you this just here. This is the IBB. It's called the iShares Nasdaq Biotech, the IBB, and it basically buys all of the best of the biotech stocks. So the chances of this one, success of this one, is very, very high. Now it's down a little bit today, but overall, as you can see, it's got a very nice chart. This is the weekly chart, and again, it's trending up. You have a nice trend line up here, and even though this is an ETF, it's got a very high relative strength. So this is definitely something that you want to take if you want to be in the biotechs. This is a way to do it, and not get scanned. So I really can't recommend. Really recommend ENZ. Sorry about that. It's just I just don't like the chart enough. Okay, so let's see. What do you think about Tesla? Yeah, absolutely. Friday greetings. Okay. Yeah. Hey, man. Thanks for that. Thanks for that. I appreciate it. Good vibes to you too. It's a great day here in Texas, in Dallas. It's a little bit hot, but it is July. Excellent. Bought Walmart. Okay, Walmart is about the only company that I can see really successfully taking on Amazon. So I do think that WMT, you can't count it out. And I'm so glad that you got that up. Let's take a look at the chart here. I'm kind of curious myself. I'm currently not in WMT. I do like the stock a lot, though, because I do think that they're executing very, very well. And of course, they have stores everywhere. I shop there, and I think a lot of other people do too. Yeah, look at that. It's gapped up. Very, very nice. There's only one thing that I don't like about this, and that is it is only 3, and Costco is number 1. COST, of course, is Costco. I just happen to know this chart pretty well. But I don't think you're going to go wrong with Walmart. If you're going to be in retail, you've got to be really careful. You want to be out of the department stores like Macy's and Kohl's and stuff like that. Just let somebody else take that pain. You're not going to make money there. But with Walmart, I think you're going with a winner. It's just one of those winner chicken dinner stocks that is going to pay, and it's going to pay because they're everywhere and they execute better than anybody else. So congrats, and I think that's excellent. It's up 9%. That is killer. Let's see if I can zoom in on that a little bit. This is the weekly chart. Yeah, very nice. Very nice trend line. Now, one thing you ought to be a little bit careful is you're going to see this 40-day moving average move up a little bit here because of this gap up. As you can see, this is a gap up. Tremendous volume, tremendous up there. So this is you're going to see this 40-day moving average change direction a little bit, but I think you may have caught it on a really good upturn. By the way, if you're buying a stock and it gaps up like this is a very good opportunity to buy a stock when it gaps up. Now, don't necessarily buy it the very next day because usually it'll settle a little bit. But if a stock is gapped up, typically it's going to move higher. That's just how it is. So congratulations, and that is an excellent pick. And I fully, I'm totally on board with picking, with picking a stock like a Walmart. SPWR, SunPower. So let's look at SunPower there. As you know, part of Tesla's portfolio is in that as well. SPWR. Alrighty, and here we go with SunPower Corp. And it is a little bit, it's a lower price stock, but I do really like this. I like this chart, and I like the fact that it's got a very strong composite rating, and I always look for that, even though it's a bit down today. So let me pull that up on the screen for you. Typically I don't like a chart that's trending down like this, but it's starting to trend up. It's still not at the level, but I love this gap up here. This is a beautiful gap up. It's looking like it's still really very viable. I would look to see if this thing clears the 11.50, about the $11 mark here, and then it's much more viable. A stock is typically more viable when it's making a higher high, but in this case, it's not going to be because it's had previously a higher high. But let's look at it just to see. There we go. Okay, so I want to show you this this chart. Here's the thing about SunPower. Really, the correct buy level is, believe it or not, about $18, $16 to $18 right here. No, I'm sorry, $16. And why do I know that? Because this is the top of the peak here, as you can see. But it seems like it's moving up here. I wouldn't be buying this one right immediately, but I put this on the watch list because of all these good things that are happening. The gap up, the strong volume, that's excellent. But I want to see a little bit more conviction to come up to the $14 to $16 range. I want to see that push up a little bit more before I'd be a buyer. But this is definitely a watch list stock, and it's a good one. And thank you for bringing it to my attention. So let's see. What do you think about AIG, pot and Bitcoin? Combo stocks are my preference. Well, here's the thing. It's funny. About 2.5 years ago, I made some very good money on a ETF that has the symbol MJ. Obviously, you know what that's for. Here's the problem with pot stocks. I don't like them, and I'll tell you why. Because, first of all, there's no national market. There is in Canada, but that's just about it. Tilray and all those other ones, they have not performed as well. There's a ton of marijuana sitting around that has no home. So I don't like this space. I just don't. There's too much competition. The governments think that they're going to get too much money from tax off of it, which they're not, because basically people are just going to grow it and then they're just going to sell it. They're not going to pay any tax on it. So I just can't be excited about the marijuana stocks. I just can't be. Again, 2.5 years ago when it was just coming out, I did pretty well in MJ, but when it started on a downtrend boom, I was out. I was down the road so fast, and I haven't been back. I haven't looked back. On the Bitcoin, that's a little bit different. There's a thing called a Greystone Bitcoin Trust, and they own about 4% of all the Bitcoin. So let's see let's look at on just for fun. GBC, GBT, I think. GBC, is it GBC? I think it is. Let me just see if I have that right. No. Yeah, GBTC. Oops. Greystone Bitcoin Trust. So there we go. Yeah, there we go. Okay. Grayscale Bitcoin Trust, or GBTC. It's down a little bit today. I don't like the chart all that much. And this is the thing I want to just show you. There's just a better place to play than this, that have better charts than this. This is not a great chart. Unfortunately, this is, and the reason I pull up this one as opposed to the Bitcoin is because this is a proxy for the Bitcoin market. You can move in and out of this one easier than you can Bitcoin. It's moving up a little bit, but really right now, not so much. I think if you're concerned about the market and currency, and I think inflation is coming, by the way, I think you want to stick to some of the gold stocks. I think you're going to do better there than you're going to do in Bitcoin. I think you are, and just my opinion. So, and the pot stocks, well, you know, you probably want to smoke it. You probably don't want to buy it. You know what I mean? You know what I mean? So I don't think, yeah, I don't think you're going to make a lot of money in that. Just my humble opinion. BLU. Okay, so let's look at BLU. I don't know what BLU is. I know some of these symbols, of course, but BLU. Oh, okay, healthcare. I like it. Like it. I'm a big fan of healthcare because that's where a lot of the you know, that's where a lot of investment is. Oh no, you don't want to buy this one. This is falling off the face of the earth. So I want to show you this bad boy. I don't think you want. I don't think you want this one. I think that this one is. I hope you're not invested in this one because I think you just lost a lot of money on it. But let me kind of pull this up here. Yeah. This is a really bad chart. I mean, yeah, this is down like 9. This is just terrible. This is just a terrible chart, and it is down like you read about. It is like you read about. It's got a relative strength of 1. That is terrible, folks. That is really bad. A relative strength of 1 means that 99% of the market is, you know, is doing better than this. What this bar tells me is everybody, including the director, is selling. I would actually look to see if there are any flights that are booked for the Cayman Islands because I think the directors of the company are looting this company right now. So I don't think you want to be in this one. It doesn't look too good for this one. I don't think you want to be there. It doesn't look good. It doesn't look good. Run away. Run away from that one. Any thought on FPH? Let me look at FPH really quick here to see FPH. FPH. See if I can get you something decent. 5 Point Holdings, and it's okay. It's a multi-class stock. All right, another penny stock. Really not the very best chart. Would I buy this one? No. No. Run away. Don't buy this one, please. I hope you don't own it. It's not a good one. Look, it's trending. This is the it's trending downwards. You don't want to buy a downward chart. Here's the thing. They always say, and it's sort of true, you know, you don't want to try to catch that falling knife, and that's what this is. It's a falling knife. It's got a composite rating of 14. Not really that good. Its volume is down, the volume is small, and you're going to lose money if you buy this stock. So I wouldn't buy it. You know, here's the thing. If you need something that is going to be a good chart that's low price, let me just suggest this. And this is real easy to do. I have a thing that I'm putting out. I started it. It's basically what we do is, you know, we have our VIP trade alerts, and what this is that I'm trying to pick out, you know, 2 or 3 good chart pattern under $10 stocks every week. And by the way, this is free. I'm not charging anything for this. So all you have to do is just go to this web address, type it in, and just sign up, and you can quit anytime you want. It's free. It's you know, it's totally free. And then I will send you good chart pattern, low price stocks. You know, and I think that you're going to do better than some of these ones like this one, this FPH. And I'm not trying to be, you know, berate anybody, but you know, this is a terrible chart. I think you'll lose money if you buy this chart. I will try to find good charts that you can buy that are buyable. You that are buyable charts. Let me just show you another, just for fun. I want to show you a one that I came out on a Trade Alerts today. That is a low price stock that does have a very good chart pattern, and that is Limelight Networks. It's a 96 rating for $7.67 when this was taken. Look at this chart. It's going up. We want to see that. You want to see a chart that's going up. And by the way, this is the weekly chart. Now, is it guaranteed money? No, nothing is. Not in this lifetime anyways. But if you buy stocks like this, you are going to do very much better. So you can get these by going to my free Trade Alerts, and here it is on the screen. Free Trade Alerts, and just go, and I will get out as soon as I see these. I will put it out. And by the way, I'm always every show I try to show you exactly what my portfolio is, because I don't trade that many positions. I typically trade 8 to 10 positions, and what I do is that it's kind of like that old saw. I used to work in a place. I was a salesman, and every month they would look at the leaderboard, and there were 7 of us. And they would look and say, okay, who's the low man on the totem pole? You're fired. That's kind of what I try to do with my stocks. Every week I look to see, where's the one that I don't want anymore, and I just fire it. So I trade very few positions. Now, here's the thing. I try to put those up every day. I try to have where my positions are. Currently, I'm strong in Netflix and in Tesla. Well, okay, it's sort of obvious. Those are good, but that's what you got to do. You got to go for the strong ones if you can, and that's sort of what I recommend. Now, what my Trade Alerts do is they build a very nice list that can make you money. That's the important thing, is that if you build a strong list of relatively inexpensive stocks, then, when the time is right, you can go into these, but don't chase balloons, because there's so many balloons. There's so many stocks out there, and most of them, quite frankly, are not very good. You won't make any money in them. So that's what I'm trying to bet. That's sort of my philosophy, and I think it's a philosophy of a lot of people, is try to get stocks, try to buy stocks that are going to you try to stack the deck in your own favor. That's the main thing here. It's true. GE and these stocks are great, and the airline stocks are great, and more power to the people that buy them. Excellent. I just don't want to be one of them. I want to be in the best stocks with the best charts. So that's why you have to sort of kind of look before you leap here. And, and that can be, a big deal. So Virus, VIRS. That's interesting. I don't know about that stock. I wonder if it's if it's a let me just see if I can pick that. I can find out what that is. I don't know what that is. So that's pretty interesting. VIRS. All right. Okay, and this is interesting. Proper Biothreat Strategy. Huh, I've never heard of it. Okay, this is a little bit too new of a chart to buy. I'm just going to show you the weekly chart on this. This just literally came out. Now, here's the rule for buying IPOs. Typically, don't try to buy them until they're at least been on the market for 3 months, because there's just not enough time to tell. And I'm going to show you the chart on this one. Yeah, this is the weekly chart on Virus. So here we go. As you can see, there's almost nothing there. Because there's just, basically, this has only been out for 3 weeks. 1, 2, 3. Now, it's definitely been bought, but it's only been out for 3 weeks. Wouldn't buy this one for at least 3 months. You just can't do that, because you just don't know how it's going to react. This stock, there's really not enough information on it. Yes, it is trending higher. That's absolutely true. But 3 weeks is not enough time, and it's not really a buyable chart. So what I mean by a buyable chart is that there's certain things that I try not to do, and one of them is when a stock comes out as an IPO, you want to be careful. You want to see at least 3 months of chart, because You just don't know what's going to happen. Somebody, might take the whole company treasury, put it in a suitcase, jump on a plane, and fly to the Cayman Islands. You don't know that. So that's why with the startups, you got to be a little bit skeptical, a little bit careful. So and of course, that's what they say about gold mines too. And I showed a gold mine stock the other day, but it's a gold mine that's been in existence for 50 years. Gold mines are basically a hole in the ground with a wire on top. That's really what they say. So take these IPOs. You have to be even more. You have to have even more scrutiny on an IPO than you would on a regular stock. So I cannot recommend this one for you on VIRS. So sorry about that. I'd like to recommend it, but I certainly can't. VLRS. Oh, VLRS. Okay, I'm sorry. I typed in the wrong thing. I apologize. VLRS. Now, of course, okay. This is a two-class stock. Okay, this is a little better, but still not kind of what I would like to see. Not strong enough for me. Just not a strong enough chart for me to buy. And as a matter of fact, it's not really that good a chart at all. So let me show you the chart. This is the chart for VLRS. And as you can see, it is down. Now, mind you, this is the sell-off in the market in general. So I'm not worried about this. But the thing is, I want to see a lot more strength before I want to buy this. This is peaked up and it's moved back to the 40-day moving average, which is fine, but it's only a 20 composite rating. There's just better places to get better, stronger stocks. This is the chart, and I just don't think you want to buy this chart. I just don't think it's a good chart at all. I wish it were, but I just don't think it is. I don't think this is the kind of a chart that you want to buy. So as you can see, it's got a poor relative strength. It's only got a 24 relative strength. What that means is that 76% of the market is doing better than this stock. So not where you want to be in this stock. So, but if I lost money. Okay, I lost money on VLRS. Okay, it's fully volatile. Of course, yeah, I know, and I understand why you did. Any stock that's below, this is one of the reasons why buying stocks below $10 is inherently more risky, because $10 is not a lot for the stock to go up or down. So they tend to be very, very volatile. The thing is, if you're on my alerts list, I'm going to try to steer you to some stocks that I think have better potential based on their fundamentals and their charts that are putting out. I have this special VIP trade alerts. It's free to subscribe, and then this is the URL for it. I try to condense these URLs because sometimes they just get so difficult to see. But 2YP9QSR. There you go. So just go ahead and just type that in, and it'll bring you right to the subscription page, and so that you can get these charts. I'll show you again one that, in case you came in a little bit late on this today. I right before I came on the air, I had this one. This is one on my trade alerts right here. This is basically Limelight Networks. This is one I sent out just a few minutes ago before I came on the air. And this is a good chart. This is a viable chart, and it's only $7.67. Now, is this going to be the equal of a Netflix or an Adobe? No. In a word, no. But your chances of making money with a 96 composite rating are far better than about an 8 composite rating. So that's what I present on the under $10 strong stock list that I'm coming out with. And I'm trying to do 2 or 3 of those a week. It just depends on what I can find, if I can find one that's strong enough to be on the list. And that's tough, because when they get cheap, they don't get strong. So typically it's a mutually exclusive club. Hey, thanks, Smith. Appreciate it. Let's see if we could take a look at STM on there. Let me just bring up that one. STM. Oops. STM. And okay. Oh yeah, excellent stock. By the way, full disclosure, I've been in this stock. This is an excellent. This is a 5G stock. Very good. By the way, this is probably wants, even though it's not under $10, this one I definitely want to put on my alerts list. And here's why. ST Micro is I believe it's an Italian, French, German, Swiss, German company. Oh, Dutch. I'm sorry. It's Dutch, Italian. It's European, anyways. They have a fabrication facility here in actually in Carrollton, Texas, and also in Phoenix. And this is a good, excellent play in the 5G area. They make chips for the new, that are going to go into the new 5G phones. So this is an excellent play. $28 is up 69 cents. Excellent composite rating. I'm showing you the weekly chart here. This is definitely for everybody out there. If you want a stock that is going to do probably very much better in the future, this is a very good candidate because they're in the right part of the market, and we're in a semiconductor cycle that is increasing. And I just want to kind of blow the chart up so kind of go through it. Okay, now it wasn't until recently buyable. As you can see, this is a death cross. The 40-day went below the 200-day moving average. Okay, never buy it when it's on the downtrend like that, but it turned and it's moved above the 200-day moving average. That's very bullish. It also has a very nice bar up there. The volume is up almost to the 40-day moving average. This has got a good chart. By the way, it's strong relative strength. This is an 88. This is meaning it's in the top 12% of the market. So ST Micro, excellent. I know a little bit about their product line. I think it's excellent, and I think you're gonna do well. Entry point, good question. On this entry point, I would enter this stock at about 31.75. That's where I would be, 31.75. Wait a little bit on this, Smith, because it needs to be in. It needs to confirm a higher high. Okay, this is really important when you're trying to enter a stock, because this is the art and science of buying stocks. It's not enough just to buy a stock. You've got to enter it at the right level for everyone out there. Smith, of course you know this, but so typically when you see a chart pattern like this, you want to buy it at a new high. About 31.75 is the number that I think is going to give you some nice results. Now, I want to take a quick look on this one. I want to take a quick look on this one because I want to see when it reports. Don't buy this before it reports. That's another thing that is kind of difficult. You don't want to buy a stock if you're entering a stock for the first time. You want to buy it after earnings. You don't want to buy it prior to earnings, because even if you think the earnings are going to be great and it's going to go up, sometimes it's unpredictable. Okay, yeah, there's an issue here. 723 is the reporting on ST Micro. So let me show you that. 723. I would be a buyer at 7 on the 24th. I wouldn't be a buyer on the 23rd. I wait on this one until you see it confirm with their earnings. If they have good earnings, this is going to gap up anyways. Your best bet is probably to buy it above 31.75 on good earnings, and that'll probably be on the 24th of July. So it's coming up, and that's kind of how I would buy it, strategize buying it. But it's an excellent chart, excellent stock. So I don't think you're going to do bad. I'm sorry. I'm sorry. Yeah, 23 cents. Okay, you're right. I'm broadcasting from the U.S. I don't know if you're in India. You might be in India. We do it backwards here, with the month first and then the day second. It's crazy. We should do the European system. Okay. So let's see. Thoughts on banks reporting next week. Okay. My thoughts on the banks, and this is just a guess on the banks. I don't think the banks are going to be too good, because here's the problem: the banks have invested. They have a lot of mortgages and that kind of thing. The Fed got involved in shoring up the bond market, I think the banks are going to have trouble. I just don't want to be in the banking sector. I want to be in the sector that the bank like. I want to be in the PayPal's of the world. I don't want to be in the Wells Fargo's, and so I don't think it's going to be good. But when you have this, there is an opportunity potentially to short using a bear call spread some of these. But I don't think the reporting is going to be very good in the banks. I can't. I don't think it is. But then I could be totally wrong on that. I am boarding Facebook and it's almost up 5%. Should I continue holding? Absolutely, absolutely. As a matter of fact, here's the thing. Now, normally I tell people, hey, when a stock starts to go sideways or go down, that's when you want to look for the exits. I don't think that's the case with Facebook. Okay, let's look at the Facebook chart. I've been in and out of Facebook, and I probably will be in it next week, just because I'm selling some other stock. I'm rebalancing my portfolio. I love Facebook as a stock because it has just everything I like. It's got the big moat. It's got It's got people have to use it. Like the advertisers hate Facebook, but they have to use it because it's got so much reach. So let me pull up the weekly chart here and let's analyze it because I think it's really worth looking at. Okay, nice. You see it moved very strongly in the middle of June above the 200-day moving average. That's very bullish. It's got a very nice bar there. It's looking good right up to the This is a buyable. Don't sell this puppy. This is going higher. It's consolidating here. This is a little bit of a handle. It's not really a cup, but you've got a little handle action going on there. That's what I'm talking about here. This is what they call the 3-week tight pattern, in that it goes up and down. And the reason that's why I look at the weekly chart is because I want to see kind of what the range is for 3 weeks. Because if it's in tight like this, that means there's energy and it possibly is going to push higher. So, if you're in Facebook, I think you're going to just do great on it. Let me pull up the other chart on it really quick. But it's number one in its group. I mean, it's all the good stuff. It's all the good stuff. Yeah, they are attacking it. But I kind of think this is a lot of their competitors that are attacking them. That's what I think, kind of like the TikTok people. It reports on the 29th, so if you're not in the stock right now, wait until the 30th to buy this, because you shouldn't buy it before earnings. But if you're in this, I don't think you have a. I think you've done well. I think you're going to do well. I would be a hold on Facebook if you're in it, and I would potentially be a buyer on Facebook on the 30th of July. So very good. Well, I got to take one more question, and thank you everybody. I so enjoy doing this show. What's your thing about Plug? Okay, well, they're in the fuel cell business, by the way. For everyone on this, I've looked at this stock. I am not a fan of this because I don't think fuel cells are going to win. I don't think they're going to win. I think we're going to see electrification like we're seeing with the Tesla cars. It's called Plug Power. Plug is the symbol on it, PLUG, and it does have a very high composite rating. So this is a trading stock. This is potentially a good trading stock, and not necessarily an investing stock. But it has a 94 composite rating. It's up 35 cents a day, or almost 4%. It's a little bit down after hours. It's got a nice chart. I mean, this is a weekly chart, and it's very strong. But the thing about this, I'm a little bit worried about the hype on this one. If I were to buy this one, I would be ready to just jump out of it as soon as it showed weakness, because I don't think this is a long-term investment. But I do think it is a potentially good trading stock. But I would only buy this on an uptick, and I would set my stop losses very, very tight at probably about 5% on this one, because I do think this is very volatile, and you could make money on it as a day trader kind of thing, but not anything else. All right, how many maximum depots offering can a company legally do in a year? Thanks. I don't know the question to that. Smith. I'm not sure. That's a good question. I'm not a lawyer, so I can't. I probably can't answer that. So let me see if I can. I can't answer that for you. I don't know what the maximum number of offerings are, but typically, if they're doing more than one or two a year, then there's some problems. So that's just my take on it. Well, thank you so much, everybody, for taking a look today. Again, I just wanted to put up there. I'm going to also have a slide set of the slides that I presented on the show today, and I'll just put that up here really quickly. And it's 2Z small d 6 capital K lowercase k 6, and that will give you the slide set. It's a PowerPoint set that I put together for every show, and it just kind of gives you an idea of the trend. And you can collect these because it'll give you an overall trend. It's only about 10 slides. But it also show you the trade of the day as well. So that's another thing. And of course, if you want to sign up for our trade alerts, you can do that at DallasTradingFloor.com. And everybody that's on TikTok, if you want to see these, if you want to see the show and at least see the slides, I broadcast every day on YouTube at youtube.com/DallasTradingFloor. And if you want to sign up for the trade alerts, just go to my profile, hit on the link, and you'll be taken right to the right place. And I have last two questions. Oh, hey, thanks. I so appreciate it. And let's see. Oh, hey, interesting. What do you think about the Fisker merger with SPAC? The jury's still out of this. I think that's what's going to happen to survive as an electric car company. They're going to have to do some mergers, and I do think it's probably a good thing. I wouldn't be a buyer of it though. I'd be a buyer. I'd buy 3 or 4 shares of Tesla rather than 300 or 400 of Fisker. Just my opinion, because I do think that Tesla is in a commanding lead right now. But I think that's a good sign for the industry, Long. I really do. I think it's a very good sign for the industry. We're starting to see some consolidation. And what's going to happen eventually is that we're going to see, we're going to see a conglomeration of companies, and that's going to be bought or merged with a real automobile manufacturer like a Ford or a GM or something like that. So I do think it's very interesting. Thank you for bringing that to attention. And everybody, I will see you on Monday. Have a great weekend, and I hope that your trading goes well and you're successful. Again, sign up for the lists, and we'll have you in the loop on all the new trading alerts that I'm going to try to be putting out. Thanks again.